Good afternoon, everyone. I apologize for keeping you waiting. Welcome to the first virtual engagement by the Securities Commission Malaysia. My name is Marina, and I'm from the SC's Corporate Affairs Department. We have 25 journalists dialing in today from both local and international media. Thank you for joining us. We have already received nearly 100 questions from the media via Menti, which we'll try our very best to answer within this 1 hour. With me today is the SC Chairman, Datuk Syed Zaid Alba. He is joined by our Deputy Chief Executive, Datuk Zainal Izlan Zainal Abidin, seated on Chairman's left. Ms. Fu Lee Mei, our Chief Regulatory Officer, on the far right, and Encik Kamaruddin Hashim, our Executive Director of Market and Corporate Supervision, on the far left. Now, members of the media, it gives me great pleasure to pass the floor to our Chairman.
Ladies and gentlemen, members of the media, Assalamu alaikum wa rahmatullahi wa barakatuh, and very good afternoon. Thank you for taking the time to join us this afternoon, and welcome to our media briefing in conjunction with the release of the Securities Commission Malaysia Annual Report 2019. Before I start today's session, I would like to begin by saying my thoughts and prayers are with all Malaysians, especially those who are in the front line who lead this fight for the rest of us. I wish everyone, our parents, grandparents, children, our friends and extended families, the best of health, and hope you stay home and stay safe. It is for the very first time that the SC is doing this briefing virtually, which speaks volumes about the gravity of the situation, but also a lot about the resilience of the human spirit to adapt and embrace change. It is this same capacity to adapt and change that we at SC have drawn upon to help us to recalibrate our thinking and refocus our priorities. I have been chairman of the SC for about 1.5 years now, and I have had the pleasure of leading a team of extremely capable, talented, and dedicated people. Over the last several weeks, this entire team has directed its considerable energy, experience, and capacity to help steer the ship through these troubled waters. It has not been easy, and we know that the worst is not yet over. There are many variables to consider, and there are multiple scenarios on our radar. We are looking at every single one of them, and we are working out the best solution for Malaysia's capital market. We have to acknowledge that the environment continues to be highly uncertain, fast-changing, and there's no precedent to compare to. But based on our learnings and experience from past events of extreme market volatility and the buffers that we have built over the years, the Malaysian capital market will, God willing, be able to weather this crisis, and I will explain why in my presentation. My presentation is split into two sections. First, we will present an overview of the current market situation. In the second part, we will share our priorities for 2020. These include measures taken in the immediate term, as well as how we intend to position the capital market for recovery. In this slide, as you can see, the conditions in the global financial markets have worsened considerably since March 2020. This comes as no surprise, since almost all nations simultaneously facing a public health emergency and taking unprecedented containment measures. This is true across both developed and emerging economies. Policy action by governments and central banks around the world have so far helped to contain and buffer against worsening conditions. However, we are under no illusion that this significant uncertainty and volatility will remain until underlying public health concerns and attendant economic challenges abate. As most of you are aware, global benchmarks have declined significantly since March this year. We have seen some recovery, but conditions remain volatile. The Malaysian capital market was similarly affected, mirroring trends seen in both developed and emerging markets, but to a lesser degree. More importantly, despite the volatility, domestic market conditions have remained orderly and supported by local participation amid non-resident outflows. The government stimulus packages have also helped market sentiment. And here I would like to draw your attention to the relative strength of our market intermediaries. Based on past lessons learned during the Asian financial crisis as well as the global financial crisis, the SC has actively worked together with the industry to strengthen market processes and infrastructure and place it on a stronger footing. These efforts have resulted in the orderly functioning and operation of the Malaysian capital market in the past few weeks. We cannot foresee the extent to which this unanticipated stress events will affect the market. You can see from the charts that Malaysian IBs and brokers are in a significantly stronger position compared to 10 years ago. Now, one factor which has contributed to the strengthening of our fund management industry is a greater portfolio diversification. Malaysia's investment management industry has grown significantly over the years and now reflects a higher level of maturity. 25% are invested abroad, and concentration has moved from equity focus to include other asset classes such as REITs and private equities. While we note a rise in net redemptions in March 2020, our licensed fund managers are poised to manage redemptions in an orderly manner. They have taken steps to manage their liquidity risks. Having said that, we are also seeing some segments of investors seeking investment opportunities in the market downturn. While total amounts raised through equity and bond market in the first quarter of 2020 have been slightly lower than the same period last year, the capital market continues to be an avenue for capital raising despite the current challenging environment. Given increased uncertainty, the SC has provided flexibilities as time extensions to issuances, including rights issuances during the MCO. We anticipate some initial public offerings or IPOs may be delayed as companies obviously need to relook at their capital requirements and business strategies. We continue to monitor closely the peer-to-peer financing and equity crowdfunding platform, which are an alternative fundraising avenues for small and medium-sized enterprises. Since January, operators have taken proactive steps to address a general economic downturn. This started in the fourth quarter of 2019. They have revised credit assessment as well as offered restructuring and rescheduling measures. In fact, R&R mechanisms, including deferring payments, have been stepped up over the MCO period. Based on operator feedback, there's still demand from issuers to raise funds, but on the other hand, investors are taking a wait-and-see approach. To address the unavailability of investors, the Malaysia Co-Investment Fund, or MySIF in short, in an immediate step has changed its co-investment criteria to a 1-to-2 ratio to ensure issuers continue to be funded. Before I move into our priorities for the year, I would like to reiterate that this is an extraordinary and challenging time. However, the SC and market intermediaries are well prepared and have the ability and the capacity and the processes in place to manage and mitigate market uncertainties. The capital market also continues to perform its primary function of providing an avenue for capital raising and is ready to gear up for the post-MCO period. With that, let me now proceed to our priorities for 2020. The SC will focus on 4 key priority areas. That is, 1, ensuring stable market operations. 2, enabling immediate opportunities. 3, facilitating regulatory relief. And 4, maintaining market integrity and conduct. The immediate priority is continued market operations during the duration of the MCO. We have taken steps to ensure that capital market intermediaries continue to operate as usual. Moving forward, social distancing, split operations, and online transactions will be a way of life for the foreseeable future. Our businesses will need to adjust on how they operate to ensure continued access to investors. The SC's Consumer and Investor Office remains operational to handle investor inquiries and can be reached through Adwan channels listed on our website. We have also been actively monitoring the market and intermediary positions, as well as anticipating risks that may arise. Where necessary, we have taken action to protect the integrity of the market, for example, the suspension of short selling. We will continue to pursue developmental efforts, in particular, to enable opportunities in areas pertinent to support the market. We strongly encourage intermediaries to step up their initiatives on product and service innovation as we bring in more traditional intermediation service online. Service providers are also urged to take note of upcoming guidelines that will provide flexibility for the use of digital means to advertise and promote capital market products and services. We are committed to ensuring continued access to fundraising. This includes raising ECF issuance limits as well as facilitating secondary trading on these digital platforms. We are also exploring alternative fundraising channels to assist SMEs, including the issuance of debt instruments. In addition, we intend to announce further measures to ease fundraising for listed companies. Broadening the suite of investment solutions will be another key focus area. This includes Islamic offerings, alternative investments, and financial planning services. In terms of policy tools, the SC has also facilitated immediate regulatory relief for investors, listed companies, and issuers, as well as intermediaries. For investors, the intention is to provide immediate relief of short-term cash flow, allowing businessmen and owners to conserve as much needed cash for their businesses. Immediate relief was given to market intermediaries through extension of regulatory filings and waiver of licensing fees, amongst others. In addition to measures already announced, we will provide further relief on corporate obligations post-MCO. This includes extension for periodic reporting and regularization of PN17 and GN3 companies. We will also be looking at means to provide interim relief on the classification of PN17 and GN3 companies. The lodgement of prospectuses for rights issues and structured warrants have been afforded relief. The SC will also expedite virtual AGMs given the new normal, as well as facilitate alternatives to meet takeover requirements. Amidst the current challenging circumstances, we remain steadfast in our core mandate to maintain fair, efficient, secure, and transparent markets. Our focus is on raising investor awareness on scams, as scammers tend to target people during the times of uncertainty. Since the MCO, we have increased the frequency of our social media outreach to a daily basis. In terms of monitoring market misconduct and corporate fraud, I would like to remind our intermediaries to remain vigilant and for PLCs to remember that their obligation to shareholders and to make timely disclosures. During the MCO, we have taken the opportunity to review enforcement processes to enhance outcomes and transparency, and we intend to take targeted enforcement action to protect vulnerable investors and minority shareholders and encourage greater self-discipline and self-reporting by industry. Mid to longer-term regulatory reforms will continue, particularly measures which will strengthen market integrity as well as digitization. That concludes today's presentation. I will now open the floor to questions.
Thank you, Chairman. We have received quite a number of similar questions from the media. These have been grouped together and paraphrased for brevity. I'll start off with the first question, which is the most popular, and it's how do you see the COVID-19 affecting the capital market?
As I've said in my presentation, this is an unprecedented situation globally and domestically. The IMF has said that this is the worst economic downturn since the Great Depression, and BNM expects the Malaysian economy to return to some normalization in the second half with recovery in 2021. But significant uncertainty still remains. While the Malaysian capital market rather, is also affected, but it has thus far remained orderly given ample liquidity and robust infrastructure. The equity market is mirroring global trends, but to a lesser degree. Foreign sell-off are cushioned by increased participation of local institutions and retail investors. We have seen some volatility in our domestic bond market, but it really continues to perform relatively better than our emerging peers, supported by deep domestic liquidity fund of our management industry. And while we note a rise in redemption in March, our licensed fund managers are poised to manage redemption in an orderly manner. There have been no major redemption risks which have been observed thus far. In fact, we have seen some new investment flowing into unit trusts. And also, despite the market volatility, our brokers and IBs remain strong and continue to intimidate during this MCO period. In fact, our brokers and IBs are significantly stronger today than they were 10 years ago as a result of our prudential requirement and supervision on intermediaries. We work closely with BNM on prudential requirements of IBs. Uncertainties and concerns surrounding COVID-19, slower growth, an oil price war which can have implication on investor sentiment, PLC performance, market volatility, and potentially liquidity.
Thank you, Chairman.
Thank you.
For the second question, we have a follow-up from the slide earlier. The second question is, can you tell us more about the PN17 measures? Thank you.
For the PN17 GN3 measures, can I invite Kamaruddin to say a bit more on this?
Thank you, Chairman. I think we have already allowed PN17 and GN3 companies up to 24 months to regularize their financials. So moving forward, in addition to this, after discussion with Bursa Malaysia will provide companies that are listed on main market temporary relief from the PN17 classification in relation to the following criteria. That is on para 2.1A. That is in relation to the shareholders' equity of the listed issuer on a consolidated basis is 25% or less of the share capital of the listed issuer, and such shareholders' equity is less than 40 million ringgit. The second criteria is 2.1E. This is in relation to the auditors highlighting material uncertainty relating to the going concern or express a qualification on the listed issuer's ability to continue as a going concern in the listed issuer's latest audited financial statements, and the shareholders' equity of the listed issuer on consolidated basis is 50% or less of share capital of the listed issuer. And the third criteria is 2.1F, is that on a default of payment by a listed issuer, its major subsidiary or major associated company, as the case may be, as announced by a listed issuer pursuant to para 9.19A of the listing requirements, and the listed issuer is unable to provide a solvency declaration to the exchange. Similar temporary relief from Guidance Note 3 classification will also be provided by Bursa for companies listed on the ACE market. The period for this PN17 NG entry relaxation will be from 17 April 2020 until 30th June 2021. Thank you, Chairman.
Thank you, Kamarudin. Chairman, for question 3, the question is, you said that you are going to conduct feasibility study to facilitate greater access to funding for small and mid-cap companies and SMEs, including the issuance of debt instruments. Can you elaborate, please? Thank you.
Thank you for the question. We have always found that the financing for SMEs and the alternative financing for in the form of ECF and P2P has been key in providing the source of funds for the small and medium enterprises. And in this respect, can I invite Lee Mei to elaborate further on this?
Thank you, Chairman. Before I go delve straight into the question, perhaps let me give you a recap on what's been happening in this space. Over the last 3 years since we first established the ECF and P2P crowdfunding platform, these platforms have successfully raised over 700 million ringgit. And this amount has helped 1,943 MSMEs fund their business. So at the SC, we are greatly encouraged by this positive development in this space, and we believe that further expansion in this area will greatly benefit our small and mid-cap as well as MSMEs companies. So as the Chairman has mentioned, we are looking at greater sources of funding for these small companies and currently conducting a feasibility study to see how we can enable these companies to issue debt in addition to what we have allowed through the ECF platforms. Thank you, Chairman.
Thank you, Lee Mei. Question 4. What are the trends the SC has observed in the unit trust industry? Are there specific concerns on the fund's liquidity position arising from redemptions? Thank you.
Can I invite Dato' Izlan to say a few words on this?
Thank you, Chairman. Picking up from what the Chairman has shared just now, I think the unit trust industry has remained relatively stable despite the challenging environment. Based on preliminary data, the overall NAV of unit trust funds in Malaysia has fallen about 4 to 5% since the end of February. But a significant portion of this is due to market movements, primarily lower share prices hitting the equity funds. While there was comparatively higher level of net redemptions in the first half of March, as well as in the first week of the MCO, we have actually seen the redemption activities moderated subsequently. And in fact, the industry recorded net sales position in the first week of April. We also observed that some of the redemptions from equity funds involve switching to other funds, which means that some of these redemption proceeds have remained invested in the industry rather than being taken out for cash. And in that regard, the general cash or liquidity position of the unit trust funds currently is comfortably supported by the fund manager's liquidity risk management policies and measures. We also regularly engage the fund managers, and they are also closely monitoring local as well as regional and global developments, including any possible contagion effects. Thank you.
I'll ask for the following question, number 5. Are measures taken so far sufficient to mitigate the impact of the COVID-19 to the local capital market? Thank you.
Thank you. As you are aware, the situation today is still very fluid, and I think we have not seen the full impact of COVID-19. Now, as you can see, some countries are experiencing a second wave. So the measures put in place by our government and regulators will give the effect of cushioning the impact of COVID-19, but we cannot say for certain the extent of the mitigation until we see the full impact of the COVID-19 panning out. One important thing which we are focusing now is to ensure that companies and intermediaries are able to sustain through this period, and that they are able to seize the recovering opportunities when the time arrives. Thank you.
For question 6, the question is, have you seen any changes in investor sentiment?
Thank you for the question. The level of retail participation in equities market have increased since January 2020, and I will ask Kamaruddin to expand further on this.
Certainly, we are seeing a lot more improvement in terms of retail participation. If you look at the statistics that we have today, up to year to date, retail participation represent around 44% in terms of trading volume, as compared to around 40.9% last year. Whilst in terms of trading value, year to date, retail participation represent 24.3%, and as compared to about 20.8% last year. So certainly, we are seeing a bit more, definitely a lot more increased participation from the retail investors. In addition, we are also seeing interest in online channels. For the month of March, we have seen online trading account activation exceeding 10,000. So we're certainly seeing changes in terms of investor sentiment, retail investor participation in the market.
Thank you, Kamaruddin. The next question is related on Islamic finance. It's quite a long one, so bear with me while I read that. Islamic finance has proved to be a reliable source of alternative funding during major crises in the past. In view of this, what is the outlook of RM-denominated sukuk this year against the backdrop of the challenging economic environment? And for existing sukuk, what action will be taken if any of them fail to meet their payment obligation in the current environment?
Izlan, would you like to take that?
Thank you, Chairman. I suppose, as we'd expect, the COVID-19 outbreak and resultant disruption on businesses has actually affected fundraising activities. And therefore, it is actually more challenging for us to project the size of fundraising in the current environment. But based on industry feedback, we do expect issuances of corporate bonds and sukuk for this year to be in the region of 90 to 100 billion ringgit. And over the past 3 years, sukuk accounted for an average of about 70% of corporate issuances. And we don't foresee any specific reason for this proportion to be significantly different this year. as there is a large pool of demand for Sharia-compliant investment products. As for the second part of the question, in terms of existing sukuk outstanding, if there is any non-payment of profit or principal arising from the current challenging operating landscape, it is very likely due to a credit rather than a Sharia issue, and therefore it will be dealt with from a credit perspective, just like conventional bonds. Just moving on a bit further beyond sukuk, I think if we look at Islamic finance and Islamic capital market in particular, I think that there is significant opportunities in given what we are witnessing currently, and I think even prior to the COVID-19 outbreak, we have seen and heard conversations on the alignment between the underlying principles of Islamic finance and sustainable and responsible investing. And the SE, as you know, have been a key proponent in this area of seeking convergence between the two segments of the financial industry. And we believe that this will continue, given the current environment. There is greater need for social projects to be funded, and Islamic finance and Islamic capital market can certainly come into place. So apart from just SRI or SDG bonds or sukuk, we can also expect to see other innovation in the market. For instance, the SC, as alluded to by Chairman earlier, is working on driving and facilitating the offering of Wakaf-based collective investment schemes to complement the range of products that we have in the social finance space, particularly in the Islamic capital market. Thank you, Chairman.
Thank you, Dr. Islan. The following question. Do you expect more defaults among bond and sukuk issuers, including public listed companies and even P2P issuers? Thank you.
For this question, can I invite Kamaruddin to elaborate?
Okay, thank you, Chairman. Just for the benefit of all, the default rates in the corporate bond market have declined significantly since the Asian financial crisis. I think at that time it was around 9.4%, and has come down to a very low, below 1% up to last year. But moving forward, and due to uncertainties developing from the COVID-19 pandemic, as well as the slower global growth, there are several issuer segments that may see higher risks to their credit positions. And based on our scanning and discussion with the market participants, the areas include the aviation, oil and gas, as well as trading and services. These segments under stress currently represent around 8% of the total corporate bond issuances. Nevertheless, it is important also to emphasize that issuers within these segments may experience some financial stress in the short term that could weaken their credit positions, but not necessarily result in default, as a majority are in the AAA and AA rating categories. And in the event of a credit deterioration, there should be sufficient buffers before cash flows become severely constrained. In addition, several of these issuers within the segment have some form of support in the form of guarantees, be it financial guarantees, corporate guarantees, or dana jamin guarantees. And we also note that for issuers that have principal or interest or profit obligations within the next 6 months or so, our observations and based on the report from trustee indicate that where there are obligations to put in monies into the reserve account, So far, all of these are being complied with. Nevertheless, we are of the view that a prolonged weakening of issuers' cash flow will be a cause of concern, and the LC will continue to monitor this space. As investors in the corporate bond market are also predominantly institutional investors, we believe that in a situation of even in the event of default, they would be able to pursue various options to preserve their investments through negotiations such as reschedule or restructuring, or rigorously pursuing its contractual right and priority of claims against the issuer. In relation to the P2P, the average default rate remained similar to last year, around the 4% mark. The operators, P2P operators, have since taken proactive steps since the quarter 4 2019, such as adapting credit assessment and credit limits, offering R&R measures and others to the issuer. At this moment, SC is not considering imposing a blanket moratorium on P2P financing notes. Our approach is for issuers to work together with the operator if they are under stress for possible restructuring and rescheduling. I think that's all. Yep.
Chairman, this has to be our last question, unfortunately. I think we're running out of time. May I please address this to Chairman to answer? The last question is, foreign selling in Malaysian equities hit the highest in March. What happens if foreign investors are conservative and stay away for the rest of the year? Would Malaysia be able to reverse the trend and attract foreign funds again in the next few months?
Foreign investors, foreign selling in Malaysian equities hit the highest in March this year. Volatility is seen across global market, and it is not specific to Malaysia. Foreign investors, especially strategic holding, remains consistent over the years. Now, as at the end of March 2020, foreign shareholdings in the equity market was around 22.46%, and the average foreign shareholdings in 1998 to 2019 is about 22.3%. Now, during this 20-year period, the lowest level of foreign shareholdings in our equity market was about 18% in 2002. Thank you.
Thank you, Chairman. Thank you to members of the ET. Thank you for the members of the media for your questions. I'm sorry we weren't able to answer all of them in this session. If you'd like to ask other questions after this, please do email Mesan, Deliana, or myself. Chairman, may I now invite you to close today's session, please?
Are there any further questions following this?
No, Chairman. No.
We don't have any more questions. Okay, thank you all for your questions. Please email us if you have any further questions or require clarification on point which we have made today. And ladies and gentlemen, we have heard this said in many different ways over the last several weeks, but I will say it again. This is a hugely unprecedented time. We are facing humanitarian, economic, and financial challenges all at the same time, brought on by a globally redefining event. It is no longer business as usual, and uncertainties will remain even after this pandemic subsides. However, I would like to remind our fund managers and intermediaries that they must continue to ensure that their customers are treated fairly. Investors, for their part, should always review their investment priorities carefully and not to make decisions hastily. At the SC, we will do our part to support you to provide the steady hands that is needed during these times to get through this together. In closing, on behalf of the SC, I would like to thank again all of the frontline workers, including you, members of the media, who I'm sure you are exhausted but are still fighting on. You have done an amazing job in spite of the daily pressures. We are extremely grateful for the role you play to keep us safe and informed. I would like to record my deepest appreciation to our market intermediaries, Bursa, their support services, as well as the SE staff for keeping the capital market functioning over the MCO period. Once again, thank you everyone and have a good day and stay home and stay safe. Thank you.